Welcome everyone. Thank you for joining us here today. Today's webinar is about multi-asset fund and its importance in long-term wealth creation by our expert presenter, Mr. Rajesh Jayaraman. Shri Rajesh Jayaraman is a deputy head product management at Nippon India Mutual Funds, responsible for product ideation, updates, and working in close coordination with investment teams for effective product-related communication to all the stakeholders. Over two decades of experience in banking and financial services industry across product, research, and central alliances segment, been associated with Nippon India funds over last 15 years and previous experience including 4 years with Axis Bank as part of third party distribution. Before moving forward, please note if you have any questions related to today's topic, please put in the comment section below. Sir, over to you.
Can you hear me, Kishan Aditi? Is my voice clear?
Yes, sir, your voice is clear. Sorry, sir, your voice is not audible.
Sorry. Can you hear me now? Sorry,
Yes,
I
sir.
cannot hear you. There's some problem with my system. Okay, perfect. Uh, so today's discussion is largely around few thematic sector kind of offerings, and we think why this themes could be of interest. More so, why this could be of interest for somebody participating through an SIP kind of mode. Because where we are standing today as a country, we know there is a lot of views in terms of markets, in terms of how today's valuations, and if some segment is more overheated today. So all this is a discussion point which is there today. In fact, the volatility in the markets for the last few days, there has been corrections. So there is genuinely bound to be doubts in terms of how should somebody look at equities, and within equities, is there some thematic stroke sector kind of offerings that one can look at. So the idea is not to get too much caught up in the noise, because noise will always be there when it comes to markets, and it's very important for us to try and look at some key parameters. So when I'm saying key parameters, the idea is to try and look at the fact that what could be the key reasons why we should still think of equities, why we still believe that India could hold a lot of promise from a equity point of view. So when we see this, what you can very clearly know, and all of us have been seeing these data points for the last few years. So India has transitioned very, very quickly to a top five kind of economy when you look at from a GDP point of view. And there is a lot of estimates today coming in from World Bank, from a lot of other institutes of repute like IMF, where people believe that Indian economy could be number three in just a matter of the next 4 to 5 years. So before 2029, we could see India becoming the third largest economy possibly. So that is the expectation. So India seems to be on the right path in terms of growth. So that's a very important data point which we need to bear in mind. So while on absolute terms, even yesterday, I think there was some article written where they said that possibly India cannot be like China, growing at 10% plus continuously for a long period of time. But when we look at in relative terms, even a 7% growth, which is what India is more likely to accustom itself to, 6 to 7% kind of range, we believe that India will remain one of the faster growing economies in the world. And this doesn't seem to be a stretch. If you look at all the activities which is happening today in India, we believe this kind of a growth rate is quite possible. And we're talking about a nominal growth of 11-12% kind of growth, which looks fairly achievable. Plus, there is whole support coming in today. So, because of this growth and the fact that there has been few other important factors, for instance, demography. which is a very, very important factor when we talk about India. Again, this has been there for all this while. We've been talking about this, how this can give a lot of dividends in terms of having a relatively young population. So today, for instance, India has two-thirds of the population, which is roughly 64-65% of the population in the working age group. According to United Nations, people between the age group of 15 to 55 are counted into this particular space. So this is one of the largest population, if you see by geography, who are engaged in a productive kind of capacity. So that is very, very important. So question could be asked. This is not a new thing. Why this is such a big factor now? Because there are right kind of enablers coming in. So what are these enablers we're talking about? So first of all is the reforms which has happened in this country, which we call it as a deregulation kind of reforms. We've been seeing over the last few years there has been a big effort to improve and transform the economy through various means, wherein increase the transparency, increase the ease of doing business, which is there today. And there has been a big push to try and get the manufacturing activities back on track. So one is you have the population mix, which is right. Second is to have the right kind of enablers to take advantage of that. So one of the biggest reforms we have seen in the last 7-8 years has been the PLI scheme which came in. This was along before PLI, we could see the production link incentive scheme which came in. The taxation changes happened where corporate taxation for India was reduced and made competitive with a lot of peer economies in the emerging markets. Secondly, we also saw a lot of reforms happening on banking, which is very, very important because finally the funding for the manufacturing activities would come in from banking. So the idea was to make the banking segment strong and reduce the worries on the non-performing assets, which was limiting the lending capabilities. Also, parallelly, what we saw was a lot of transparency reforms being undertaken. So, for example, real estate, which is very, very important for setting up the manufacturing units, they try to make it more transparent in terms of how the business is done there. Along with this, a lot of ease of doing business has happened. Digital economy or digitization was another very important theme which was undertaken in the last few years by the policymakers. So that has led to this huge transformation today. What we have seen because of that is a lot of leakages, which we used to call as direct benefit transfer, which used to happen in the past, has gone down significantly, and that is helping the government spending to be more meaningful, and it is helping the government spending to go in the right directions. So what we are seeing is all these policy reforms are creating the right kind of enablers. In fact, we are talking about 60 lakhs plus jobs getting created because of what has happened on the manufacturing space, the PLI boost, which has happened. Again, taxation reforms happened. A lot of transparency reforms. One of them was taxation. GST came into account. So goods and services tax is very, very big indicator of the underlying economic activity. We have seen for the last, I think, 14 odd months, we are seeing this number being exceeding 1.4 trillion, which tells you that the underlying economy continues to be very, very robust from an Indian this thing. Also, we believe that when you look at from a when you put all these factors together, and I'm just trying to sum it up in a very simple way because these things we have been discussing for long, most of us are aware of what we're trying to showcase here. If we just get them into one single nutshell and see, there are three, four important things which is visible from an Indian context. One, obviously, the fact that if your demographic benefits are there, where you believe that a major part of your population is young and in the working age group, and per capita income is going up. So India today is moving up significantly there. In fact, people are expecting the current per capita income, which is about $2,500, to move upwards of $5,000 in the next 5 to 6 years. So, which is a very, very significant change in terms of the broad capability of people to spend. And herein we could see the combination of demographics as well as a rising income, which can lead to a very differential kind of spending, which we call as aspirational spending. In fact, when we look at today, the entire Indian demand, we could see significantly higher demand for more of items, which we'll call them as more elite or luxury kind of items. So we can see that with cars, we can see that with a lot of other like travel and leisure as to how people today are willing to spend in the 3-star, 4-star, 5-star kind of properties when they travel, or they're more inclined to travel by air, which is more expensive, but still the demand is high. Similarly, when we look at four wheelers, we are very clearly seeing a trend where the entry level four wheelers are not getting so much of demand, but the medium to higher in terms of the SUVs and all is where you see bigger demand coming in. Similarly, you can see demand for something like two wheelers being much slower. So it tells you the aspirational spending, which is one important area, is visible, and that is related to huge changes in lifestyle. So typically, who can benefit from this? Which team can benefit from this? The answer is simple. It is the consumption-oriented kind of play, which is largely playing on this lifestyle changes. So today we can see how beauty products, how textiles are getting listed. There's a big market for that. People want to move to the higher end of products which they consume. So clearly that shift is visible. Not only in India, if you see worldwide, some of the biggest brands today are commanding the highest market capitalization there. So some of the richest people in the world are actually owners of some of these luxury chains. So it tells you there is a increasing demand worldwide today to move up the spending chain, and that is where consumption as theme can benefit. So we believe this lifestyle changes which is happening where people today are more at home in terms of consuming pizzas of the world to moving up to the higher channels. So in terms of spending across different categories, so be it discretionary, be it FMCG kind of categories, we could see a big demand coming in. So that is where consumption as a theme will stand out. At the same time, what we cannot ignore is, given our demographics today, while we are saying 60% of our population is between that 15 to 55, what it also tells us is another 20 or 30% is also beyond that age group of 55. In absolute terms, 50 plus people who are 50 plus, India would be among the top three countries in the world in terms of absolute numbers of people above the age of 50 years. What is happening is, because of the current lifestyle patterns, we are seeing fairly long-term lifestyle diseases like the cardiovascular diseases, the sugar issues, which is diabetes, and all India being one of the largest impacted geographies in the world. So probably India has one of the biggest number of or largest number of patients in some of these areas. So while some of these are lifestyle diseases, it can only be controlled and it will require medicines for the lifetime. So healthcare again emerges as a theme on two counts. One, there is a large set of population, unfortunately, which would need a lot of medical care and continuous medical care. And this would involve not only consumption of medicals, it will also lead to a lot of diagnostics wherein you need frequent checking, testing, all to be done. This is one part of it. The second part of it is the fact that the awareness is increasing. So we can see the penetration of insurance going up today. Generally, post pandemic, post COVID pandemic, we are seeing significantly higher awareness in terms of health and healthcare related issues, and because of which there'll be more proactive spending in this particular space. So we have seen in the post-pandemic period that despite the rising number of hospital chains, despite the rising number of diagnostic chains, the penetration levels remain very, very low from an Indian context. So that again throws up a very important opportunity which one can try and capture on the healthcare space. So these are two big areas. Obviously, I'll delve more upon these themes as we go ahead. But consumption and healthcare, you can relate to the one important theme which we discussed, which is demographics and the rising per capita income. So aspirational spending and increasing lifestyle diseases. These are two important areas which one can capture to do through these two themes. The second is manufacturing or the capex growth, which we discuss and which I'm sure I think all of us have been seeing the way our government has been focusing on manufacturing. In fact, today when you see roads, railways, defense, these remain very very important area of manufacturing from a public sector or from a government perspective. Private sector's capex has started to come back today, clearly because they sense an opportunity. It's China plus one or Europe plus one, where because of supply side issues which we had seen in the past, today clearly there's an environment which is getting created where the global world, especially the developed world, is looking at alternatives to countries like China, and India emerges as one of the better placed kind of geographies, given the fact that we are a democracy. There's a lot of policy continuity, and hence there's a lot more confidence with some of these players when they look at India. Also, with the reforms which has happened under PLI, we could see manufacturing as a space in India has opened up. There is a lot more comfort for international investors to come to India, bring in FDIs, put up manufacturing hubs in India, which is what we're seeing today with some of the large automakers. We already have seen a huge transformation in the telecom space from where India became transformed itself from one of the largest importers to become the one of the biggest exporters of handsets today. So that's been the shift which we're seeing, and this is a trend which is reasonably long term in our view. We could see this trend continuing because if India needs to grow at a reasonably strong rate, and which will cater in turn to the rising demographic benefits, manufacturing is one key activity which needs to be undertaken. And that is where we think this capex growth story in India at least has reasonably long legs, and it gives you a very interesting opportunity. So you have an power and infra kind of fund which is available for us to try and capture that. The third important area is financial services, where the theme is financialization of savings. Through all the past reforms since demonetization, the effort has been to try and make things more transparent, more accountable, and more in the system. So today we could see the emergence of Jandan accounts, where significantly large number of population today are banked under the Jandan scheme. Also, we have seen a huge shift in terms of how all our uh, uh, savings today are accounted for, are available. In fact, we've seen how income tax is able to track everything today. You can have multiple deposits, interest across schemes. Everything is today getting accounted for and visible. So we have moved to that shift today from traditional saving assets to more of financial kind of assets today. So very, very clearly, that seems to be the trend even going forward. Multiple segments will benefit from this. Banks obviously are the obvious beneficiaries. We are seeing insurance, asset management companies, stockbroking, all of these entities benefiting from what is happening. So we've seen how over the last few years there has been a huge craze for coming and participating in equity markets and stock markets. A lot of money which probably was erstwhile going to traditional saving instruments today, given the fact that rates are declining, the yields are coming off, plus inflation is reasonably sticky, the awareness is increasing among people, and you could see how money is moving to more financial kind of assets. Insurance, we have seen the penetration levels going up significantly. Banking space obviously will benefit immensely not only from retail demand but also from the fact that corporate capex is just beginning to start in India, and that should be a big driver for the credit growth for banks. So we think this is another very, very important thing. And last but not the least is a theme which is called as digitization, which we have seen through various initiatives of the government, be it the Jam Trinity, which is the Jandan Aadhaar kind of combination, which we have seen, how digitization is becoming very, very important. And there's a huge amount of transformation today, which has happened from subsidy transfer via electronic modes directly to bank accounts to various other things where digital as a theme is emerging very, very strong. So digital doesn't necessarily mean only information technology or IT as a theme. It means to do anything and everything to do with innovation, where you're trying to transform your business, be it at a product level, at a service level, or at a business level. So any of these transformations through innovation, which is largely leveraging on technology, that is where it can fit in. So you can see how these four themes can be in turn related to some key thematic offerings which we have, and which is what the whole discussion is about as far as today we are concerned. So we think each of these themes are crucial when we look at from our Indian context. So, be it healthcare, consumption, banking, and power and infra. So, all of these themes, along with innovation, are very, very crucial if India is going to deliver and India is going to capture some of these opportunities which we're trying to highlight. So, we'll take up each of these funds as we go forward. So, we have got five funds here. And of this five, the top four funds which are there, the banking, consumption, power and infra, and pharma, they've got very, very long term track records. So each of the funds are more than 15 years in existence. Innovation Fund is relatively new, just about completed 6 months now. But each of the other fund has got a very, very long term track record. So that tells you that across these kind of market scenarios, how they've been able to create wealth for investors. This is a slide which just showcases, obviously, I'll have performance slides going towards the last part of it also. Most of these funds have delivered compounding returns in excess of 15% on a 10-year basis. Some of them are 16, 17, some of them are 15, 16. So that tells you the kind of wealth creation capabilities. For instance, through SIPs, you could see how over a period of more than 15 years kind of time period, what kind of wealth creation would have been possible. So investing at a rupee of 10,000 rupees per month, how this could have transformed over a period of time. So that's what we are trying to showcase here. Also, these each of these themes are very very diversified. So when you look at the underlying portfolios, and if you just make one single portfolio, assuming that you have allocations to all the five themes which are there, and make one single portfolio, what you will see is a very very diversified kind of mix. So you will have banking as 12%, you will have pharma as another 10%, you will have consumer the discretionary plays, which is automobiles and all this coming in as another 10-15%, manufacturing as another 10%. So you could see a lot of diversification there. Each of these portfolios are unique. So obviously, we're not saying you should go for all the five of them, but you can have a combination. You can look at one or two, but each of them are unique in their own right. So you will not see an overlap. For example, in our infra fund, we have zero banking. So what it tells you is we are very, very true to mandate. We will not try to dilute. In a pharma fund, you will not have any infra place. In a banking fund, you will not have consumption place. So that is the differentiation which will be built in to each of these funds. You will see the overlap being very, very low, except here and there where some allocations can happen, 1-2%. Obviously, each of these funds have flexibility of investing up to 20%, which can be non from that particular theme. So it will be largely from a liquidity perspective where it can fit in. So I'll take you through each of these funds, what is the opportunity at this point of time, and why you can consider allocation to some of these funds. So normally when we talk about sector funds or thematic funds, the first question which comes to the mind is the fact that these all these are very volatile. So why should one really invest, or can a retail investor really participate in a sector or thematic fund? So while the name is sector fund, and obviously the portfolio would be focusing primarily on one particular sector, if you look at some of the themes which we discussed today, they are reasonably aligned to the domestic recovery one. Secondly, we are not saying that the entire portfolio or the core portfolio should be invested into this space. A part of the portfolio can be considered for allocations here. Third is the mode of participation, which is the SIP or the systematic investment plan, which will help us tide over this volatility which can happen. So when a particular sector goes through a bad cycle, this can always happen where one cycle is not favorable for one sector, but some of the other sectors might do exceedingly well. So you can have a mix and match kind of approach in this particular thing. So today, when we look at the first sector which we are going to discuss and the fund is the banking and financial services fund. So as I mentioned, this is a very very important area for the equity markets. You could see a lot of major indices from Nifty to Sensex having almost one third of their weights assigned to the financial services as a banking and financial services as a space. So it tells you these some of these companies are very very large. For example, if you look at the top three private banks in India along with the one largest public sector bank, they would feature in the top companies by market capitalization. So that's a significantly large weight which is there. Also, because banking is considered to be the backbone or the catalyst for any kind of economic activity to happen, especially in a scenario like where what we're anticipating strong GDP growth, it cannot happen without the participation of the banking segment. Yes, there are times when things can be a little challenging, which is what we had seen in 2018, 19, 20 periods, where the banking industry went through a big crisis of non-performing assets, and then obviously there's a lot of cleansing which was done, so which led to a period of very very muted growth environment where banks were very very careful, cautious in terms of future lendings. And over the last 3 years, there has been a lot of cleansing, and the bank balances today are in a very, very good shape. That extra froth which was there has been cut down. A lot of segments which is not performing today either has been taken over or they have gone through the NCLT route, and a lot of recoveries have been made. Fresh accretion, we have seen much less leverage in the last few years from corporates again. So the banks' balance sheets today are much, much cleaner, in a much strong position where they could lend to the forthcoming cycle of growth is what we are anticipating. Also, where we are today, we could see the rates coming off in the industry, which again could spur bigger demand coming in, especially the credit demand coming in. So while there could be some impact in terms of the treasury book which banks and financial services would have, what will happen is probably the credit demand should pick up as we go forward. Also, with capex activity being reasonably strong, we believe this is one big area of growth possibility which is there. How do we manage the Nippon India Banking and Financial Services Fund? We are very, very well diversified across the entire space. So from private sector banks to public sector banks, we will also have exposure to the NBFC segment, the insurance segment, the housing finance segment, also some bit of fintech at some point of time. Well, today, fintech has going through a bit of challenges. We think that could be an interesting area to participate at an opportune kind of time. So the idea is to try and be present across these themes. At the same time, take your conviction bets because the index, if you see for banking, is also very, very skewed in favor of the top three, four banks. Whereas the portfolio which we manage, we will have allocations to beyond those kind of names. We will also have allocations to PSU banks on a tactical basis. We'll also have higher allocations to teams like the non-banking or the non-lending kind of financials, which is includes asset management, stockbroking, and capital market kind of players. So it gives you an opportunity to try and participate. So all of us have seen how financialization of savings today is happening, right? From opening of bank accounts to demat accounts, we've seen a huge transformation which is there, and that is exactly the opportunity which we sense and want to try and capture in our portfolio. And we manage our weights quite actively, so we don't hug the benchmark here. So typically, the question could be that there are so many funds available on the passive side also. So why can't we play that? The answer is this is managed more actively, and that's the benefit you can try and get when you participate in this particular space. So next in is consumption. We discuss why consumption is a very important theme from overall Indian context, and we think we are at the tip in terms of the entire consumption story in India is concerned. If you look at worldwide, the spending habits actually change significantly once you cross the threshold of $2,000 per capita income, and India is already at closer to $3,000 today, much over $2,500, and progressively we can see becoming a $5,000 economy per capita income in a span of next 4 to 5 years. So that is what potentially we are looking at. Already we've seen a huge difference in terms of the spending habits today, be it the fact that the smartphones or the OTTs, which we're familiar with, or the QSR, which is nothing but the quick service restaurants, we've seen a significant shift in terms of both discretionary and non-discretionary consumption. So retail, for instance, again a story as part of consumption has come back very, very strongly in terms of demand. Travel and leisure, again, one more service where we've seen significant amount of this thing. Even today, when we look at some the occupancy rates in a lot of major hospitality centers, which is hotels, the occupation rates are very, very high. This is after the rentals going up. This is after the room tariff going up significantly. So the demand is huge, and this can only continue. And we have seen that happening in the global world, where travel and leisure are very, very important, very focused kind of thing, and which is what we believe is transforming India as well today. So the effort here within the consumption portfolio is to maintain reasonable amount of diversification, to have a good mix of both discretionary and non-discretionary kind of plays. So what I mean by that is FMCG, and typically the areas where the spending is more based on discretion. For instance, areas like autos, for example, four-wheelers or passenger vehicles, which is there. Uh, Also the spending which happens in travel and leisure. So we think gradually, given the current market dynamics, we are increasing allocation to some of the FMCG space because valuations have been relatively muted, not significant participation by this particular segment. While the rural demand continues to be little weak, we are seeing some bit of pickup happening or urban demand being reasonably strong. Hopefully, the rural demand has been remaining weak for quite some time now. It's expected to come back. We have seen areas like real estate picking up significantly, which is very important job creator for the rural, the tier 3, tier 4 kind of cities. And that is what one can try and benefit from. From a positioning point of view, we tend to have a good mix of large cap and mid cap. So normally a large cap is about 50 to 60%. Currently, we are hovering around that 60 to 70% kind of range, given the market dynamics, the market volatility. Uh, 20% of the portfolio, as I said, can be into some of the other themes. We can try and participate in some leaders with strong balance sheet. So usually stock allocation is restricted to less than the cash allocation is less than 10% of the portfolio. So the idea is to try and participate in the market leaders. Obviously, we don't want to get into over leveraged kind of plays within that. Clearly, the focus is more towards businesses where earning visibility is strong because we've seen earning numbers being fairly good, but some of the future demand expectations relatively muted given the rural has been lagging behind. So, which is where the allocation in the portfolio over the years, last couple of years, has been more tilted toward the discretionary space where you get proxy benefit from the overall spending, especially in the urban segment. So now we're trying to rebalance the portfolio a little bit here because of the opportunity coming from a valuation perspective. The third sector, which has done phenomenally well in the last 3 4 years, has been the infra segment. So where we have this fund called as Nippon India Power and Infra Fund. So it's a pure infrastructure fund. The name is a legacy. So this was called the Power Fund initially. So it continues to be called as Power and Infra Fund. So again, the focus here is to have a good mix of manufacturing plays. Obviously, valuations are not cheap in this particular segment, but the idea is to participate across the entire spectrum. So we have seen how there has been a huge transformation. Government has been targeting to create 13,000 kilometers, 14,000 kilometers of highways every year. Overall, 50,000 kilometers of roads have been laid in the last 5 years. So it tells you there's been a significant focus on creating the right kind of infrastructure. It's been reflected in roads, it's been reflected in railways in terms of huge amount of infrastructure being put up, from modernization of stations to Vande Bharat trains. We have seen the advent of metros across multiple locations in the country, possibly bullet train on the anvil. So all this is highlighting significant amount of spends happening in the infra space. We could see large spending coming in from the government side. We've seen how within the budget, infra has become very, very important play. In fact, over the years, we have seen how India, from a consumption-oriented economy, is gradually shifting, and today more than one third of our GDP constitutes of the investment or capex-led kind of themes. So there's a big transformation which is happening and which is visible for all of us. So attempt here within this fund is to try and capture some of these opportunities across manufacturing space, for example, engineering. Also look at the defense, which is a very important area where government has encouraged private sector participation, logistics, real estate, construction. All these themes are some of the areas where we attempt to participate here. Also, the utilities, which is nothing but trying to play on the power demand, where India, from a uh, is moving more to become a power deficient kind of country now in the last few years, and the increasing demand which has been happening. So we think this theme is here to stay. Yes, valuations are not cheap, as I mentioned earlier as well. In this segment has seen a lot of re-rating happening, but we believe this is just the beginning of this entire cycle. So normally these cycles tend to last for another 5 years, 10 years, and we are probably somewhere in the mid part of the cycle, or just the early cycle is kind of ending and we're moving to the middle kind of stage. If you look at broad parameters and the focus of the government, so government has been very clear in terms of their overall focus. The adherence to fiscal deficit is one. At the same time, they're not compromised on the spends towards infra space, and that is, in our view, one of the biggest areas of opportunity which one can look at. This portfolio mix tries to capture across multiple sub-segments. It's got a good mix of large, mid, and small caps. Today, we've increased the large cap exposure. Currently, we are possibly 50 to 53% large cap, and rest of them going into the mid small cap names. The fourth theme is something which is more of a secular kind of theme, just like consumption we discussed. This is Nippon India Pharma Fund, the healthcare oriented strategy which we have. It also straddles across multiple segments. So one is domestic demand, which I highlighted in the opportunity. Also, the fact that we should not lose our sight is India today exports to more than 150 countries worldwide. So India is very strong when it comes to manufacturing or generics in terms of the healthcare space, and especially in the US markets, India continues to be one of the significant players there. So while the international market, the pricing controls have changed in the last few years, especially the US, and the margins have come off, it's still a very important market. So domestic, we know the opportunities, but even in international generic space, India continues to be a very dominant player. Healthcare services has been on the rise in the last few years. The amount of diagnostic chains, all of us are aware. We are aware of the hospital chains which are getting created, and despite that, we believe there is still a long way to go from an Indian context, and that is the opportunity to grow. Plus, the fact that the demographic benefit, which we discussed, can also become a challenge, especially given the fact that 50-year plus population is one of the largest in the world, and hence subject to a lot of lifestyle diseases. So, which will lead to a very, very healthy demand coming in. One. Secondly, the penetration levels still remain reasonably low. Increasing insurance coverage, increasing awareness can lead to this segment seeing reasonably secular kind of growth. Again, contract research is one new area which has seen a lot of interest. And at some point of time, India could lose a lot of spends have happened in the top businesses in terms of research and development, which means that possibly they can also lead to some breakthrough discoveries which can help better pricing power. So we think it's a very interesting theme, as some of the other themes which we discussed, more secular in nature. Again, has seen a fantastic last 1 year in terms of performance. But we think if somebody is looking at a 5 year, 7 year kind of allocation, this could be one secular theme which can grow at market slightly better. And at the same time, when things turn a little volatile, this is one of the first sectors where a lot of investors look for safety, given the reasonable predictability, reasonable visibility with the sector offers. So our fund is focused on all these themes across these categories. Obviously, the domestic orientation is higher, given the fact that today the visibility is much better in terms of demand there. Also, the pricing controls which have been introduced in the US have reduced the margins in the last few years. So the export businesses are slightly low in terms of allocation. The higher weight is towards the domestic piece. Also, the healthcare services, especially hospitals and diagnostics, is where the allocations are relatively high. Diagnostics remain better in terms of valuations, and have not seen so much of run up in the last few years, opening up an alternative investment opportunity there. We also follow some very strict risk management principles here within this particular fund to maintain adequate diversification. The last product is something which is new, but which blends in very, very well with the overall story of India growth, which is on innovation. So, worldwide, we're seeing today the biggest development in the last 2 years has been the emergence of AI, or artificial intelligence. And obviously, there are a lot of debates going around as to how AI can impact jobs, how it can impact a lot of industries, way of doing things. But we think innovation is here to stay as a theme, and innovation is something which cannot be ignored. And that is essentially what we're trying to capture. So, innovation is a very broad term. I completely understand that. But how do we look at innovation? So, we're trying to look at innovation across different set of businesses. For example, innovation can be in financial services, where we are seeing how innovative, newer ways of reaching out to investors. For example, fintech. We had seen that happening with one NBFC, which could reach out to people offering consumer loans in a very differentiated kind of manner. Innovation from a product perspective. We are seeing innovation happening across from a business perspective, how QSR, like business out of nowhere, today have come in. So quick service restaurants have come in, at a click of a button, they're able to service you. So they've created a very different, complete transformation at a business level. So product level innovation we have seen, at a process level innovation we have seen across multiple industries. For example, OTTs. So Netflix today is something which we know how a process reengineering happened, and how things have transformed. So innovation is something which is not just limited to one sector. Please don't confuse this with IT or information technology only. It can be across multiple segments. It can be across manufacturing. It can be across financial services. It can be across consumer discretionary or entertainment kind of segment. Multiple segments, innovations can happen, which is where our product Nippon India Innovation Fund tries to capture across some of these opportunities. This is a fairly concentrated portfolio, and the fact that the attempt is to try and look at high quality names, higher large caps, but at the same time look at some differentiated names from an allocation perspective, which also means the portfolio could be subject to more volatility than a normal diversified equity fund, which is where it's thematic fund, and offers that kind of a differentiation. So some of the traditional sectors, for example, like commodities or healthcare, very traditional healthcare kind of names, all of them, the allocations could be quite limited within this particular segment. But some of this new age segment which is coming up today, so companies which are into renewable energy, EVs, or it could be anything to do with transformation, like the digitization, which is we're seeing digital kind of transformation. All this would be part of the theme of innovation. So just to showcase that each of these funds, despite being sector funds and general perception, this is tactical. You need to play this for a particular period of time. Let's look at it from a 1 year perspective. Acha ho gaya, let's move out of this. All that things are very different. So you look at most of these funds. For example, the banking and financial services fund. If you look at a 15-year SIP track record for this fund, roughly 15% compounding returns have been generated. If you look at a 10-year period, again 15% compounding. If you look at a 5-year, obviously recent 5 years have been good, but still a 20% kind of compounding in this particular period. So that tells you the significant growth potential. And this we are talking about the SIP kind of returns. Similarly, if you look at a pharma fund, 15 years it's delivered 18% compounding. 10 years it's delivered 17% compounding. 5 years has been 22, 23%. So again, a significantly strong number. Just look at Sensex for a 15-year period is about 14% compounding. So that tells you general growth in the industry has been so much, but sector funds like pharma, like banking, even consumption, which generally has been a slightly slow-moving theme, has delivered 17% compounding over last 10 years. So which is very clearly visible. And the power fund, power and infra went through a very, very bad cycle between 2012 to 2018-19. 7 8 years where things visibility was quite poor. Despite that, 15-year compounding return is 15%. 10 years is almost 20% compounding returns. So that tells you the case as to why each of these product categories could be interesting. A combination obviously would be even more interesting. Even if not a combination, if you want to take one or two, depending upon your preference, this could throw up a very interesting mix to the overall portfolio. Even from a lump sum performance, I'm not going to talk too much on this. It is available and the data is available, and where you could see each of these funds have done well. So the idea here was to showcase and share with you some very, very important points on each of these product categories. Also, the fact that what is normal perception is when it comes to sector funds, it is only for very evolved kind of investors, people who can understand the market better. Can we take tactical calls? You don't have to worry about all that. So as long as you're clear and your belief is strong that the India story which we highlighted to you is there and credible, and it is likely to stay for some period of time, you can look at that. The other option which you can look at here is the fact that you're getting a chance to participate in very different, varied kind of themes. So it's like owning a diversified equity fund, where normally what you see with a diversified equity fund, you have financials, you have manufacturing, you have allocations to consumption as a theme. You are getting it as a package overall. If you somebody tries to look at it, so that is what one can try and look at. You can participate in each of these themes, fairly diversified portfolios, and this gives you a good way to participate in the India growth story. So this is what I had to share. Let me stop here. Any questions you would have, would be more than happy to answer. Aditi, if you allow me a minute, what I'll do is I'll also log in from my mobile. There seems to be some issue. I cannot hear you, even though you can hear me clearly. So some issue with my system.
Sure, sir.
So
Sure.
let me just log in from my mobile. Just give me a second. And any questions you can put it in the chat box. Otherwise, I can immediately answer.
Sure, sir.
In case you have any questions, Aditi, you can go ahead. I'm trying to see if my
Uh,
system's. I don't know. I'm not able to figure out as to why this issue is happening.
there, there are no questions as of now. So I think it's looked like we have covered all the bases. And is there anything else you would like to mention before wrapping up? Hello?
Yeah, I can hear it now. Sorry, there's some problem. Now it's clear.
Yeah. So I think we have covered all the bases. Is there anything else you wanted me to mention before wrapping up?
No, that's it. We just think this could be an interesting opportunity and interesting way to participate in some of these key themes, which could drive the India story.
Thank you, everyone. Thank you, sir. We appreciate you being here. Thanks again for joining us today, and we will see you next time soon. Thank you.
Thank you.